So, Robert, we saw the increases in real GDP growth this week. Now we're just shy of 3% for last quarter. And what was it that drove up that percentage?
Yes, Susan, we just saw the third estimate of fourth quarter last year, real GDP growth, now up to 2.9%. A little more inventories, a little more consumer spending. It is a little unusual to see the third revision have the biggest move. We went from 2.6 down to 2.5, back up to 2.9. But it tells us that the economy really finished last year in pretty good shape, and we expect that momentum to carry over into the almost complete or now complete first quarter of this year.
So I know we won't see those results until late April, but at this point, do you still think we'll be close to 3% for first quarter?
I think we can hit that 3% mark. It's looking good. We may be a little bit above that. I don't want to get too optimistic yet, so some things can go wrong. But I think we can show a consistent 2 or 3, 4 quarters here of near 3% growth, which is really a very good thing for the U.S. economy, and will be the first time in this expansion cycle we've seen that kind of consistent moderate growth.
Also, nominal personal income is up, wages and salaries up about 0.5%. Now, how did that impact consumer spending?
Well, it was interesting because, as we've talked about, we've seen good job growth recently. We've seen wages starting to inch up. We've seen hours worked inching up, and that all pushed the nominal income numbers up. But there's a disconnect now with income going up 0.4% and consumption going up 0.2%. And that disconnect is really due to the auto sector. We saw a big pop in auto sales last fall because of the hurricanes. Hundreds of thousands of cars had to be replaced quickly. And so we're coming off of that peak in auto sales from last fall. And that's keeping the overall consumer spending numbers somewhat subdued.
Housing prices. So we are seeing significant increases in housing prices, 6.2% overall, but really some of the western states are seeing the biggest increases. Which states are those, or cities actually?
Yes, we're seeing stronger gains certainly in Seattle, Washington, in California, with southern San Diego coming up a little bit, but really San Francisco, San Jose area. So Las Vegas was also mentioned in this report. So the western half of the country is really seeing stronger price growth now than the eastern half. And some of those areas are up in the low double digits, 10, 11, 12%. So those are pretty good numbers. And that is yet another positive for consumer spending this year that increases household wealth, and good amount of wealth generation plus good consumer confidence should equal good spending numbers for the rest of the year.